I'm a stone cold killer, I'm a billionaire. I got my own gold digger. If I wasn't this way, I'd rather die. Did it die, yeah. Did it die. Did it die. I'm a stone cold killer, I'm a billionaire. I got my own gold digger. If I wasn't this way, I'd rather die. Did it die? Wait. Did it die? Wait. Did it die?
Whatever you want, I'll be whatever you want. Just tell me you love me or not, whatever it costs. I know I'm talking a lot, there's something I gotta get off. Don't wanna be this no more, I don't wanna drink no more. Always gotta do the most, thinking that I'm insecure. Really should've listened more, but I don't, of course. I'm an asshole, I'm a good guy, I'm your best friend, I'm the worst type. Tell you everything that you heard right, just so I can fuck on the first night. Feel like I'm losing hope, running from coast to coast. I don't know where to go, this all I've ever known.
I'm a stone cold killer, I'm a billionaire. I got my own gold digger. If I wasn't this way, I'd rather die.
No.
Did it die?
Wait.
Did it die?
Wait.
Did it die? I'm a stone cold killer, I'm a billionaire. I got my own gold digger. If I wasn't this way, I'd rather die.
Won't die.
Did it die?
Wait.
Did it die?
Wait.
Did it die?
My aunt think I'm perfect, I know I'm not. My mama be worried, I told her stop. They know I did drugs and think that I'm off. Little do they know I never could stop. My manager hate when I'm pulling up late. Back on my bullshit, she think it's a phase. I got relations I gotta maintain. I'm two different people, my side and my main. Yeah, I'm sober, I'm an addict, I'm a lowlife, I got habits, but I refuse to be average. Really so tired of acting, don't know what I miss no more. Too bad you don't hit me more. I'm bad when I get too bored, careful what you wishing for.
I'm a stone cold killer, I'm a billionaire. I got my own gold digger. If I wasn't this way, I'd rather die.
No.
Did it die?
Wait.
Did it die?
Wait.
Did it die? I'm a stone cold killer, I'm a billionaire. I got my own gold digger. If I wasn't this way, I'd rather die.
Won't die.
Did it die?
Wait.
Did it die?
Wait.
Did it die?
I'm a stone cold killer, I'm a billionaire. I got my own gold digger. If I wasn't this way, I'd rather die.
When it hurts like this, we climb the greatest heights.
Alright guys, welcome to the live trading room. Hope you're doing well. Hope you had a nice weekend. We've got to get stuck into these markets this week. Typically this week, maybe next week as well. This week or next week is likely when you see kind of the markets slow down a little bit in terms of normal activity, what's considered normal activity, but really it's kind of the volatility levels throughout the London session and the New York session are kind of where you start to see a little bit of a slowdown, usually due to the big institutional players going on holiday. But also, at the moment, we're seeing quite a bit of movement, some interesting structure levels that we could potentially take advantage of. So I want to go through some of those opportunities this morning. And usually before that quiet period, all these institutional traders are trying to hit their bonuses, right? So they're pulling out all of their best plays and they're really going for it. So they're a little bit more aggressive. So we will go through some of the opportunities that could potentially play out as part of that, and we've got the kind of the privilege of retail traders to be able to jump on the back of those moves and ride those up or down, depending on what way they're going. So there's a few juicy ones I want to go through. If this is the first time you've been here, let us know. Got the chat up here. We are streaming out to multiple platforms today. So I'm in my tier 1 trading room. And I'm also on Instagram, I think, and YouTube. It looks like there's an issue connecting to tier 1. Not sure why. But I hope you're doing well. If you guys are here for the first time, welcome. This is a live trading session where I go through 8 currency pairs in a portfolio to give you guys a demonstration of what real trading approaches look like, what real trading's like. And it really does open the eyes of many people when they've got this kind of fantasy or infatuation with what trading is. Kind of balances the emotions there and the perceptions. If you're not new to trading, welcome. If you're not new to this, welcome back. And we're going to go through 8 currency pairs: Aussie CAD, Aussie dollar, pound dollar, euro dollar, pound Aussie, pound yen, dollar yen, and finish up on the New Zealand dollar. There's quite a few nice counter trend or structure based setups that I want to go through this morning. If you guys have got anything you want to look at, definitely shoot it into the chat. Make sure you let us know. And yeah, engage in the chat. I've got access to all of the chats: tier 1 chat, YouTube chat, and all of the Twitch, LinkedIn, Twitter, Facebook, and Instagram. So let me know where you're from, and also let me know if you are. Let me know if you're looking at any setups. I'm going to get stuck in just a second. Aaron Young, good afternoon / morning. I'm in a short on the Aussie CAD 60-minute head and shoulders pattern 9029. Cool. We'll take a look at that in just a moment. Before I normally go through the pairs in order. It's important that we maintain consistency, and I like to demonstrate consistency to you guys. But I might go through the pairs in a slightly different order this morning, purely for opportunity reasons, because there's quite a few things going on. Dollar yen is one of the juiciest. Okay, we might start on that, and the pound yen not so much. The pound dollar. Well, the euro dollar, there's an opportunity as well. Pound dollar, there's an opportunity. It's not as attractive purely because of the spike previously. But as you can probably tell, there's a lot of structure-based setups. And the reason there's a lot of structure-based setups is because there's a lot of ranging markets. Or, so this is a range, this is a range, this is a range, this is a range, right? We've got consolidation, ranging markets everywhere. Dollar yen is extremely bullish, but we are approaching a level on the weekly or monthly time frame here where we haven't been this high since 2002, and we're really just looking at price patterns to see how it behaves around that 135 level, and then New Zealand dollars in a range as well. So the juiciest ones for structure based setups are the pound dollar, which isn't as juicy, the euro dollar, but the big one is the dollar yen. So let's, instead of going through these in order this morning, I'm going to do something different. I'm going to start on the dollar yen. All right, I'm going to start on the dollar yen. Now this is the monthly time frame. Has anyone got any setups on the dollar yen before I start sharing my analysis and my thoughts? Anyone? By the way, anyone who was asking about the, I had a few messages about the motorbikes. I got, I ended up ordering 2, just to be safe. What's your view on gold? We'll take a look at gold. We'll take a look at gold after these pairs. All right, let's take a look at the dollar yen then. So from a technical analysis standpoint, which I'm a technical trader, a technical analyst, and that's how I identify my high probability setups. That's how I've built my entire playbook of trading rules. And from a technical standpoint on this, we have been bullish for a very long time. Okay, this is since March or beginning of 21. We've been bullish. We've been putting in new highs, and over the last few weeks, it's like there's no stopping this thing. We broke major resistance level at 125, which was previous structure resistance twice. Okay, we broke through that, and then as you look left, you can really just see. We want to look left because structure leaves clues, right? So the next level of resistance is right here, okay? Which you might notice that is where we're trading. If you just look left on your charts, on the monthly chart, you'll see that this is a monthly resistance level. And the last time we were here was over 20 years ago. 20 years ago. So when you're building up some kind of factors of confluence, that would be one. I think it's safe to say that as buyers are watching this market right now, they will happily place their sell orders around this level to sell out their positions. If people are looking to short this market, they will be looking at this, and they will also be looking to place sell orders. And what happens is, because structure's subjective, okay, so everyone will have orders in different places around here. There'll be a cluster of sell orders here, and when price goes into those clusters, it will start triggering, and it will just tank. That's why it speeds up. The drop in the market speeds up because of all of those triggered sell orders. And what you'll see is the MACD, you'll see some MACD divergence, you'll see the RSI, right, tank as well, because the speed of the transactions, you can see it's massively overbought right now. And then obviously the next most powerful level is going to be here looking left. But what I would say about this is, if you look on the monthly, you see we had this doji candle, which means indecision. That zone really is more kind of here, right? So if I draw on this zone with the rectangle tool, that is a broader zone, that big zone there, all right? But right now, we've got this really tight zone, which we're at right now. So now what can we do? We know that there's a really nice opportunity up here. Haven't been that high since 1998. But we're right at a level now where there's some high probability. There's a high probability that there's going to be some sell orders. So what can we do now? Let's go down to the daily time frame, which I'm going to use as my higher time frame analysis on this. Right now, look at this. We start to decelerate. If you're familiar with deceleration in the market, price action patterns, you'll see that we've had bullish candles all the way up into this zone, and then look what starts to happen. Right, we cap out, we start to decelerate, there's indecision, there's bear pressure, clear bear pressure coming in. And if you know how to read candlesticks, the two most fundamental pieces of information that you can use to your advantage when reading candlesticks is the close of the candle and the wick of the candle. Okay, the close of the candle will tell you where the battle ended, okay, and what the overall story was, but the wick will tell you the story of how the battle played out during each session. And when you apply that to your discretion and to the confluence of a prediction and a thesis in the market, you can then start to form a real solid story and build a real strong case for entry, okay? So what I'm seeing here is this. I'm seeing the bulls fully in control. They want to take that market up to 135, where we were in 2002, over 20 years ago. And then we start to see, bang, slow down. The bears try to push down and get rejected. The bears then try to push down again, then get rejected. Then there's a bit of indecision, okay? And then there's a last push up and then a lower low, lower close. And then the bears take control a little bit, right? Now the bulls have pushed up one last time, okay? One last time, giving us a double top, right? And they failed. They failed to break and close above the high, and look what's happening now. Deceleration again. We've got massive divergence here. We was massively overbought up at 93.5. We've got strong divergence back down to 60, okay? Divergence on RSI, equal tests of the highs on price, lower highs on the RSI. Really nice, right? Nice setup. So that's the daily time frame. We've got this beautiful double top here on the 4 hour. If you guys trade double tops, okay, you are at the high, right? This is the best price you're going to get for a double top. Still valid. You know, this is this is going to provide you with the best opportunity here. So the way to if you was to get involved with this, just as a bit of education here, this would be what we call a at market order, because we want to tell the broker that we want to get in immediately. We want, as soon as you can, please fill my order short right now, wherever you can at market at your best price. And that's what we're going to do. So we click on market, we click on sell, put your position size in, okay? And you should know how to work out your position size. Depending on your risk or depending on a dollar amount, we're going to just, for the sake of this demonstration, put 2 mini lots, which is a 20k position size, and we're going to just literally hit sell. So that will immediately put us into the order, into the market, and we're triggered, right? So the broker's now triggered the order. Everyone following? Everyone following along? So when you're placing orders, it's important that, one, you remain emotionally poised, okay? There was no emotion in that. There was no fear, greed. We've got a perfect V-top here. We've got price symmetry, time symmetry. We've got confluence on the monthly, weekly, daily. Now the 4 hour for entries. Beautiful setup. No violation of the setup. This is all very, very, very much valid. So now what we need to do is figure out where our stop loss needs to go. Okay. Now I like to use an ATR, because an ATR based stop loss gives the trade enough breathing room. Okay. Because it's outside of where it's been moving the most, recently. And it's also a position where it's going to get me out as soon as I know I'm wrong. Because if it moves outside of the average range for the last 14 days, right, in the wrong direction to my prediction, I want to be out as soon as I know I'm right, so I don't take unnecessary losses, right? Bigger risks than I need to. So very, very simply, we look at the highest high here, which is down at 58, okay? And we've basically got a 60 pip ATR, okay? 60 pip ATR. So for the 60 pip ATR, we're going to be at 136.20. Okay, so we just click on this order, 136.20, put our stop loss in place, 136.20. Boom, just like that. We're using yen pairs here. We've got a 60, 136.20. So the reason I put it in that order is because I like to entry stops targets. Entry stops targets. And you always want to drum that into your head, because it's a protection thing, right? You want to get in, then you want to protect yourself. It's like your shield. Always do that before profits. And it goes against what most people think you should do. But if you think about it, it's in line and in alignment with your natural evolution as a human. Your psychological evolution as a human. We're more fearful than we are greedy. Okay? And that is why they say the bulls take the stairs and the bears jump out the window. And if you go back in time and you see a caveman, if he comes out of his cave and there's an apple tree, and he's really hungry, and there's an apple tree 100 meters that way, and his cave's 100 meters that way, and there's a lion, okay, he will run back to his cave before running to the apple tree, okay? And that is because he's more fearful than he's greedy. So fear is stronger than greed, and then what will happen is he'll stay in the cave, and it'll take a few days to come out and get stimulus and get confidence, consumer confidence, right? And he will then creep out of the cave to finally get the apple a few days later, maybe, right? Or a few hours later. Okay. So, Dense says, don't you need to know where the stop loss entering for the determine the position size? Good question. If you're trading a percentage-based risk of your account, okay, so say you're trading 1% and you got, keep the numbers simple, right? 10 grand, you're risking $100. You would need to work out the pips into the stop loss to the entry. Then you'd have to work out what dollar amount your position size is in to make sure that it's relevant to your position, which would probably be about $4, $4.50 a pip or something like that. And then that'd be 0.45 lots, or, you know, whatever it is. But we're trading a fixed position size using a smoothed ratio money management strategy. Okay, so we increase and decrease our position size with performance rather than 1% risk on every trade. Something we teach in tier 1. It's quite an advanced money management strategy. So you'd have to check that out if you're interested to hear more. So now we've got the stop loss in place. First of all, I want to say, if you're going to enter something like this, you're going to have to be prepared to be stopped out and then enter again up here if you're still looking for that counter trend move, right? One thing let's talk about some downsides to this setup. The downsides to this setup is the pullback has pulled back further than I'd like for the double top. Okay, we had this ascending channel, which was typically the the play to the downside. We had this ascending channel. Okay, textbook ascending channel, rolled over, hit targets, which would have been down here at 132.85s, 84. And then we continued rolling over. We pushed down a little bit lower than I'd like, but we still didn't test previous structure. We still didn't, it just made the rules for a double top because we didn't test previous structure resistance. We didn't touch it. We didn't test it. If we did, I would eradicate this as a double top entry, but we did come close, and that makes it not as attractive in my opinion. So this could easily get stopped out, right? And then we'll be looking up here, which is, although it's a more powerful level of structure because it's the 1998, right? This is the extreme high in the market. It's still a broader zone. So it's going to be more difficult to get in there, particularly with my trade plan rules. So now what, right? Where does the target go? Well, the target, I don't want to be greedy with this, but because of what's happening, because of where we are, sorry, my throat is so crap. Because of where we are and because of this situation and because of what's happening, right? This, normally I would take a 1 in, 1 out, right? 1 in, 1 out. So I'd be looking at taking targets at this resistance level at structure. And it would be a 1 target. That's it. Job done. However, in this situation, it might be wise to consider splitting your position. So placing 2 contracts, okay, and having half of your position taken off or 3/4 of your position taken off, whatever suits you at this level, and then trailing your stop loss down to squeeze as much profit out of the move as possible, because we're likely, if we do roll over, we're likely to see a big rollover, a very, very long rollover. So how do we capture that, right? And the only reason I would consider doing that in this situation is because it's the first time we've been here in 20 years, over 20 years. If it was just an once every few months, every year even, maybe every 2 years, the structure levels tested, it wouldn't be as attractive for trailing stops. However, this is a big deal, right? So these are the opportunities where you can use your knowledge and discretion and skills of reading price and understand where you can adapt and where you can do this kind of thing. Right? So, does that make sense to everyone? Let me know. For the sake of this demonstration, I don't want to confuse everyone. We're going to be looking at taking targets right here, okay, at this structure level. So 131.18 for targets. Take profit 131.22 pips above that for front running orders, and we're in. Okay? And the reason I want to get out there, is because I don't want to fight for all of this. If you was splitting your position, okay, I would consider taking the next position. If you wanted to split it in two fixed positions, the next position would be down here at this low here, okay, 127.28. That's where I'd have my second position. Or if you trail stops, you're just trailing behind price, whatever your method is for that. I'd use a lower time frame for that. I'd use a 60-minute time frame to trail stops. I wouldn't use a 15. I would use a 6. One last thing I want to talk about this, and that is the 2618 setup. So that's a little way off. But the 2618 setup is essentially a violation of this retracement. So you wait for the price to break down, and then you wait for a push up for the lower high, basically. Okay, so you know when a trend comes to the end, you cap out, you double top, and then what happens is we violate this retracement. We put in an initial low, we pull back up and put in a lower high, and you're looking to get in around that level. You're looking to get in around that level, and what the 2618 is a very aggressive limit order using Fibonacci ratios. So you enter on that 618. Right? Look at that for RAS, right? You enter on the 618, 133.57. In this case, obviously that's a made up number because this move hasn't played out. So don't take that. Don't take that price and go and place trades or anything like that. If you're just placing trades because I have, you're not a trader anyway. You're not going to get anywhere doing that because it's just it's FOMO. That's all it is. Traders don't have FOMO. You have to get rid of that. Cool. So that's the dollar yen. I wanted to share that with you. Let's go to the pound dollar and see what happened here, because this is something else that's a bit more in play. So I'm not sure there's going to be an opportunity here for you guys at the moment. But if we go out to the monthly, again, ranging market, okay? Ranging market, we've got this zone right here. And right, unfortunately, we've got that big spike down, but really, if you ignore that spike, if you put that down to news or, whatever it was, where was it? It's probably going to be non-farms. I think that was non-farm payroll. If we go out to the daily, we can find out what day that was on. I've got a feeling that was... It might have been non-farms. I can't quite remember what that was, but anyway, it was a news event. All right. But now, if you ignore that, we are right in this zone again. We're right in this zone. Someone was asking me about candlesticks and bars. Recently, I've been running a trader challenge where I've been giving you examples with candlesticks and bars because there's people in the trader challenge that are using both. They're exactly the same, guys. They're exactly the same. It's the same thing. You can read them the same way. In fact, if you just... I don't know if you can change the settings on this. I use Trade Nation, but if you if you just imagine this is a full candle, it's exactly the same. You know, if you bought on a rectangle and kind of did that, whoops, it's not going to line up, is it? But if you did that, you know what I mean? It's going to be the same thing. Yeah, you're probably not going to be able to draw on there. So the left hand, you read it left to right. Left hand is the open, up, the high is the high, low is the low, and then the right hand little indent is the close. So if the left is higher than the right, it's a bearish candle. If the left is lower than the right, it's a bullish candle. And obviously, most of you guys have bearish candles one color and bullish candles the other color, but it's exactly the same thing. I've accustomed to, I used to use bars all the time. So back when I first started trading, I used bars for about 3 years. And then I transitioned to candlesticks. I don't know why. It's just one of those days where I wanted to change up my charts. You know what it's like. And I went to candlesticks. And I've been there ever since. For, years and years and years and years. A decade, probably. Okay, so we are in that zone, right? We're in the monthly zone, support level, drawn out the support level. The difficulty with this is the daily time frame. We've dipped into that level. We haven't violated the previous low, and we've now bounced up, but we've also bounced into previous structure. So remember what I said about this one, where I said it hasn't pulled down into previous structure, so it's still valid. This one has. This one's pulled right in. Okay, so and lots of people at this point will be going, this is a bearish trend. Correct, it is a bearish trend, but would you want to sell this based on where we're at on the bigger scheme of things? It's not wise, right? It's better to look for a reversal setup in this situation. Now, there's a couple of things I'm looking at. I'll show you what I'm looking at to give me confirmation that we're likely to see a reversal at this level. First one is we've seen the hold. Okay, price action has held. We had bearish candle, bearish candle, bearish candle, bearish candle, bang, bullish candle, held, and we've seen this little blip. Second one is we've got lower lows on price, okay, and we've got higher lows. This is the MACD, okay, and standard setting MACD. We've got, this is what we call divergence, and divergence indicates a rotation in price, a reversal in price. All right. We've also got major structure support. Okay, so we've got major structure support there. The other thing that I'd be inclined to look for a full-blown reversal on this, because there's not going to be anything attractive here in terms of entry criteria. Look at that. We've just rallied up. There's no way to get involved with this for me. No way to get involved. Right? Stops need to be down here. We've got no double bottom here on a trading time frame. There's no bullish pattern setup or anything like that we could use to get involved. Unless you entered the higher close or something like that. There's not going to be a lot on there for me. So what I'd be inclined to do on this is look at my swing trading setups and go, right, let's bring on the trend line. Okay, and we'll be looking, basically, we'll be looking for a break of this trend line for a full-blown reversal. And that just gives us a bit more added confirmation. You'll see the moving averages cross over from the 8-20-50 to the 50-28, okay? And then if we break out of this zone, then we can look for a pullback, and then we can look to buy this up. Justin says, is it too late to take place in, is it too late to take place in the Trader Challenge? No, this Trader Challenge that I'm hosting has gone phenomenally well. Okay, phenomenally well. We've got 125 people. We had 125 at the beginning. Slowly filtered out the ones that just, couldn't keep up. But we've got about 80 or 90 people still gunning. We've got daily homework, peer groups, everyone's engaging, everyone's going through the work in bite-sized chunks, 30 days, and we finish on Friday. Friday this week is the official day where we would have spent actually 30 consecutive days of lessons. And at the end of that, I'm going to be announcing the winner, and then we're going to do the whole trader challenge again next month. All right. So if you stick around in this live session, when we take a quick coffee break in a minute, I'll dig out the link and I'll post the link in here, and you guys can go and put your name down for that trader challenge, and we'll be in touch with you then. All right. So hopefully we can work with you on the trader challenge on the next run. But it's awesome. And it's been a challenge for me because I've had to really create the content in a way that I believe that people will be able to trade in 30 days, which has never been done. You know, it's usually BS. People normally sell it as a get rich quick thing. I'm getting the right people in the right position, and then I'm teaching them exactly what they need for 30 days, and then they're going, you know, they're good to go. Can you do it a second time? Yeah, we're going to be doing the trader challenge a second time. Yeah, we'll keep doing it. If you know, we've got some fantastic testimonials so far, like some amazing results. I'd show you the. I'll show you the group. The peer group's just going off the charts. The peer group is nuts. I mean, look, this is crazy. I mean, this I don't know if you can see this or not, but these are people sharing their homework, doing videos, explaining. There's all these kind of messages they're not loading out right now, but there's picture after picture after picture. People sharing their homework, their analysis, doing all the homework. It's great. It's incredible. Do we have to be a member of TOF for the Trader Challenge, or can anyone enter? The first challenge was for TOF members only. Whether we open that up or not, I don't know. Because the thing is this, guys, right? I know the people who are at that level in TOF, they're going to be able to do it in 30 days. Whereas most people that get into trading, they're not in the right position to even be trading. And my only goal, as you guys know by now, is just to get results for people. I just want people to be successful. I want them to get a result so they can tell someone. That's it. That's my only focus. So I only want to pick people that I think are right. I don't want a ton of people going, this doesn't work. So I select people because I know that they've got the highest probability of being right and doing well. Cool. So what does this mean on the pound dollar then? It's an attractive zone. Is it something I can take advantage of? Not really at the moment, no. The only thing that might be spring out to some of you pattern traders who love the Gartleys and things like that, ratio patterns, is you do have a very deep Gartley setup, or relatively deep Gartley setup, which is bearish. So if we do push up and break that trend line there is a completion point up there for a Gartley where you might look to short the market. But in terms of lower time frame stuff, yeah, there's a couple more patterns down there, but it's really dribbling sideways. So there's not a lot to report on that one. Let's take a look at the euro dollar, and then we'll take a quick coffee break. Okay, so we'll go out to the euro dollar. This is the one that I shared with you guys. Again, it's already bounced off of that level. If we go out to the monthly, you'll see it's at a real nice level there as well. Okay, so no doubt, horizontal line, boom. We are holding that zone beautifully. Previous structure, it's a significant level, right? Significant level, and now we're putting in tweezer bottoms. So tweezer bottom candles on the monthly are going to be very, very powerful, right? There's a strong probability that we're likely to push to the upside. If you're not familiar with tweezer bottom candles, you know, they're normally the open and the close is normally in the upper half of the candle. They're both the same size, equal in size. They've got equal lows, and they look exactly like this. So that's tweezer bottom candles, and what they represent is a hold, okay, and then a reversal. So if you're familiar with reversal setups in terms of candlestick patterns, that's one. If you're not familiar with candlestick patterns, look, I don't believe on trading just off of a candlestick pattern. That's not going to give you an edge, okay? It's not likely to give you an edge. What is a good idea is if you learn candlestick patterns, as well as price action patterns, as well as support and resistance, right? As well as a couple of indicators, right? As well as market phasing, market conditions. And if you know all of that stuff, you can then form a story, a very, very accurate story of what price is likely to do, right? And what it's done. And then you can build rules around an entry that will give you a high probability trading system. And then it's just down to you to have the discipline and the consistency, most important, or the discipline to consistently trade your plan, and then you're good. That's it. So I'll be interested to hear, based on what I've just said there, what is it that you struggle with the most? You know, where have you failed in your trading? What's let you down? What's stopped you becoming profitable in your trading? Let me know. Is it consistency? Is it discipline? Is it, well, I mean, it's really only going to be those two things. In fact, it's going to be one thing. It's going to be one thing. The one thing is going to be discipline. Because you need discipline to build consistency. And people say, well, yeah, well, I've got another job that I've got to do, or this came up, that came up, and had to get on that. Well, you need the discipline to block out the consistency in your calendar for your trading and go, no, I'm not doing anything else. So it all comes down to discipline. You know, that's really it. If you have discipline, but you're using a trading system that isn't consistent, then again, you're not disciplined, or you just don't know what trading's about. But I'm telling you now, you learn how to read a market condition, how to understand what phase that market's in that condition, how to use support and resistance and a couple of indicators, then how to use price patterns and candlestick patterns. Once you know those 6 things, you can build rules for an extremely powerful and extraordinary, life-changing strategy that will generate higher returns for you than any other vehicle out there. Consistently. That's the key word, consistently. Okay? So if you guys are, if you guys have always been interested in trading but have never really got around to, it's always fascinated you, you've always kind of thought, I'd be good at that, I think I'd be good at that. Don't go out there searching for strategies, right? Learn those 6 things. Learn those 6 things. And if you need help with that, obviously tier 1, us guys are here as well. So the euro dollar on the daily, we've bounced off of that support level. The move's kind of been made, hasn't it? There's no there's no reversal set up here for me. This would just be a structure-based setup. It wouldn't be a reversal in trend or anything like that. It would just be a range, the bottom of a range where you'd be looking for a buy signal down here to trade it back up to the highs. And then look for a sell signal up here. One thing that the euro dollar does really nicely is it goes into really nice zones of structure consolidation, where it's horizontal support and resistance, and they're tested, numerous times, multiple times before we break out to the upside or downside. So you can capture 4 or 5 moves trading that range before we continue in trend, which is great. Pattern traders, yep, got a couple of patterns here. I'll draw one on for you guys. X A, B, C, D. This is a Gartley, bullish Gartley. Again, we're dribbling sideways like the pound dollar, so there's nothing here setting up at the moment. What should we do? Let's take a quick coffee break. Let's take a quick coffee break then. And I'll put 13 minutes on the clock. Sorry. 13 minutes on the clock. It is currently 8:12. So we'll come back at past. Will it be past? No, it'll be 25 past, sorry. 25 minutes past. We'll be back. And if you've got any questions in the break, fire away. And I'll see you in a sec.
Is it so hard to let you go?
All right, guys, welcome back. Second session. Refilled the old coffee. I think the Instagram the Instagram stream dropped out. I don't know why. But yeah, not having much luck on the old on the streaming front today. Tier 1 dropped out straight away. There was an error. YouTube's going strong, and I think some of the other platforms are okay, but yeah. No questions in the break anyway. I didn't see any on Instagram, none on Tier 1, none on YouTube, so I'll just crack on. Looking at some of these other pairs, Aussie CAD. So Aussie CAD, let's just remove these drawing tools. Real quick, you'll see the difference between when there's an opportunity that needs some analysis and some refinement to the analysis, and then some entry criteria met, and maybe we talk a little bit longer on certain pairs, but then when there's nothing on another pair, you'll see the difference in how quickly we skim through that. Because look, this pair is choppiness. Choppy consolidation, not interested. We're in the middle of nowhere. There's nothing here for me, right? And I know that even on those even on my trading time frames and lower time frames, even there's not going to be anything other than maybe, you know, some ratio patterns or something like that. But there's nothing here. I can just see it already. Not a lot going on. Moving sideways. There's indecision here. So I like to stay away when there's indecision. I don't want to leave the site, but there's definitely indecision here, and I just don't want to get involved. Aussie dollar, similar situation. We've bounced off of that nice support level that we were looking at. Then we've gone into choppy consolidation. So the only thing that presents itself here are ratio patterns, because there are sequence of certain ratios being tested, right? So you get this, and you get this, and you get this, and you get things like a bat pattern. You guys are familiar with bat patterns. There's a 70-50 level, which is a psychological number. 70-50, there's a bat pattern completion. We haven't penetrated the B leg yet, so you don't need to get too excited about placing orders. But when the orders are ready to be set, then you want to get a stop loss above X, whether that's an ATR or a 113 inversion, 70-91. Your entries would be at 70-50, or a couple of pips below if you're front running. And then your targets, best case scenario targets for this, would be at the 382, which would be down at 69.92. So the reward to risk profile on this would look like this. I know it's going to be good because it's a bat pattern, right? So, and when I say good, I mean in your favor, and it's, you know, skewed in your favor in terms of ratio, risk reward ratio. So if I delete that and delete that, you can see that is a 1.5 to 1. 1.5 to 1 setup, and there's a little setup for you in consolidation. Pound dollar we've been through, euro dollar nothing, pound Aussie, this is a pair I haven't really wanted to look at for quite a while, but we will. Pound yen, similar. Dollar yen we've been through, and New Zealand dollar, yeah. New Zealand dollar is very similar to the euro dollar and Aussie dollar. It's kind of a hybrid of both of those. So if you look at the New Zealand dollar here, and then go to the euro dollar, very, very similar. And you go to the Aussie dollar, very, very similar. Right? It's kind of a mix between the Aussie dollar and euro dollar. It seems to be a combination of the two of those. But it's similar situations. It's sideways consolidation, indecision. The only thing you're going to find there is advanced ratio patterns like the fibs, the bats, the Gartleys, the crabs, the sharks, the ciphers, all that kind of stuff. Okay? And they're very easy to spot. If you don't know the rules for them, you can go in Tier 1 and just learn them all. Learn a handful of them. Go and test whatever one you resonate with most, whatever one you see best, and that's it. You're away. You've got a trading system. Then it's down to you to go and trade those rules live in the market. But they're very easy to spot. You know, I don't want to sit here and walk out each one. I can see that there's one potentially setting up here. What I'm looking for are the juicy structure-based setups, of which we've taken advantage of a couple. I'm only going through 8 pairs in this portfolio for this live room. I trade a combination of 27 different pairs in my swing trading. But right now, we've kind of covered all of the juiciness. If you guys have got any setups you want to bring on, let me know. If not, I'll probably go to a couple more of these. I can't really, you know, New Zealand dollar, similar situation, right? So let's just draw out. In fact, let's go through the New Zealand dollar. Anyone got any questions? Great opportunity for questions now, because you know, this is your, if you've got any questions to do with trading, now's a great time. Mentioned you were going to do the trader challenge link. I did. Let me get that link for you guys now. Let me get that link for you guys. Bear with me 2 secs. I've got a thing for GoPro camera. Oh, I've got a thing for cameras, right? But every time I go away, I'm going away on Friday. Every time I go away, I order the new GoPro, the GoPro, and man, I don't know what it is with me and GoPros and cameras. Always been fascinated with cameras. Live challenge. 30-day trading challenge. Right, you ready? I'm going to post the link. Copy link. Let's see if this works. Ready? I'll post it as me. There we go. Ready? 1, 2, 3. There you go. If you fill in that form, you'll be notified nearer the time when we launch the next challenge. Short Aussie CAD 60-minute head and shoulders currently moves stocks to break even. It was quite aggressive in protecting risk. 60-minute. So yeah, esoteric nomads. Are you looking at this? Whoops. Hate it when TradingView does that. Has to have the last say, doesn't it? Oh, bearish. Right, got you. So this one. Why is it an intraday gap on my charts in the candlesticks? Willem, tell us where and what, and we'll take a look. Gapping is just down to, you know, a high volatile move, usually a news release or something like that. And in the Forex market, it's rarer than the stock market, for instance, because the stock market, you normally see gaps every single day. Forex market, usually at weekends, if any. But if the market is moving very, very fast, then, you know, you get a news announcement come out. You will see gapping, for sure. People ask how I handle gapping all the time. There's two things I do with gapping, right? One, I still perform my analysis as if the gap wasn't there, so it's a continuation. But I also take note of gaps because you can use those to your discretion. What you find is they have significance. If you find a market with a gap, let's just say we go out to, what are we on, the hourly? Let's go out to the 4 hour. Probably not going to find one now, are we? Here we go. There's a gap there, right? So there's a gap there and a gap there. That's quite a big gap. This is a 4 hour time frame, and there's a gap of, let's close that off. There's a gap of 70 pips, right? So we gapped open 70 pips. If you bring on your horizontal line tool, and what I'm gonna do is just draw two horizontal lines at that gap so we know where that zone is, right? I'm gonna delete that off. Now what I'm gonna do is I'm gonna go out to the daily time frame. And by the way, I haven't rehearsed this or anything. This is just going off of your example, right? So I don't even know what we're going to find here. But generally what you find is you find that zone is a major, major respected level. Look at that. Look at that. How many times can you see support and resistance respected, not just like by luck or chance, significantly at that level? Significantly. So these are things that you want to use to your advantage. Take note of those zones. What I do is I see a gap in the market. I see where it's to and from. I make a little note. I pin it up on my journal there, and you can set alerts. You can do whatever you like. And then when you are performing your analysis, your pre-market analysis, you go, right, are we at any of these discretionary levels that I've got written down here? What do I do? How do I adapt my plan if we are? Do I become more aggressive? Do I remove some of the filters that I normally look for to become more aggressive? Do I increase my position size? Do I increase my risk? Do I shoot for extended targets? Do I tighten my stop? Do I broaden my stop? And these are all things that you can use to put into your trading plan to make you a better trader, to be right more than you're wrong, and then to win more when you're right than you lose when you're wrong, which is a continuous journey of development, learning, refining, optimizing. But it's a great thing to do, right? Just by identifying that gap, we've now identified a major, major zone there that is respected time and time again. And that gap was how we found it. Anyone got any setups they want to share? Again, pound yen will be a good one if we get up to this this high up here. Euro pairs are gapping. Yep. Yeah, the gap isn't all the gap indicates is there's strong, there's a lot of movement, a lot of rapid movement in the market. But it does pay to identify that and note it down as a discretionary level, because you can use it to your advantage. There was a gap there as well. Justin says euro dollar 4 hour. Euro dollar 4 hour. BAT, which I think we've oh no, we drew on a Gartley. So I think you're looking at a bigger one, right? I think what Justin's looking at is this XA B C D. So yeah, there's a lot of pattern traders in this community. This would be bullish. This one would be bearish. Let's color this red so people don't get confused. There you go. Have you heard about so-called smart money concepts originally made by a YouTuber named ICT? I have heard of smart money concepts. I don't know who originally came up with that, but yep. All trading approaches are, okay, whether you're following Elliott waves, Ichimoku cloud, double tops, double bottoms, whatever it is that you're looking at, head and shoulders, all these systems, cup and saucer, cup and handle, whatever it is, all of these setups, right? They're all variations of the same thing. They are all ways and names to put confluence factors to high probability Zones in the market where there is likely to be a reaction. And that's it. That's it. And no matter what one you follow, no matter what you call it, or what name you've bought into, it will be down to 6 things. The 6 things are the market condition, the market phase in the condition, support and resistance, an indicator of some sort, or a couple of indicators, price action pattern, and a candlestick pattern. And if you apply all those 6 things, you'll usually find that they apply to most of those setups. So whether you can, like, traders who use price action and they trade using those 6 principles, after a while they don't even need the indicators, because they know they know when they can see a MACD divergence. They know when, you know, there's an RSI divergence just by looking at price. They don't even need the indicator. So if you learn those 6 things, you'll know how to build a well, how to fish. And that's what we've always strived to do at Tier 1, because teaching you a strategy is not the one. All right. So I've got big love for everyone who creates their own prolific trading systems, right? I've done it. I've got lots of my own trading systems, but I like to teach traders that it doesn't matter what that system is. Let's just understand the fundamentals of trading so you can go and build something that suits you and your personality and your lifestyle, because my life's different. My personality is different. I'm a robot. I'm a robot. Very, very binary. I'm very, very black and white. But other people aren't. Doesn't mean I'm right or good. Doesn't mean I'm wrong or bad. It just means we're all different. Learning to trade is truly a game changer. I believe that everyone should learn to trade, even if you've got no interest in trading. If you've got no interest in actually trading and applying it to the markets, I still believe that learning to trade is one of the deepest self-discoveries that you can do. And people think, oh yeah, you're just saying that. I promise you. And anyone here who's done it will know. You'll know. You come out the other side of that a different, an enlightened person. You know yourself better. You know yourself way, way better. Whoops. A double top can be a Gartley or SMC or Elliott. It's all the same. Engulfing can be yeah. Yep, they're different names to different things, but the same principles. East London Kiwi says bear cipher on the Euro Yen. East London Kiwi. Is that Duncan, I wonder? I wonder if that's Duncan from our Tier 1 trader group. Bear cipher on the Euro Yen. So if you're familiar with cipher patterns, this is what we're looking at here, right? X, A, B, C, D. Textbook cipher pattern at market. If you are entering this, then your targets will be down at, or initial targets will be down at 382. Let's just draw on this target here. So 382 will be your initial target, and then you'll have, if you take secondary targets, conventional secondary targets are at the 618. So you'll have secondary targets down here. Let's draw that in the darker green. And then your stop loss will be above X, whatever that is, whatever your rules are for that. Now, if you use a 113 inversion, you go from A. Some of you do C to X. I do A to X. And you're looking at a 113 inversion. And what you'll notice about the stop loss here is this is probably going to be a 1-to-1 or a 0.9-to-1 reward to risk. That's very typical of a cipher pattern. Looks like this one's actually in your favor slightly. I'll just use this tool here. It's a 1-to-1. Yeah, 1-to-1. Slightly in your favor. Cipher is called a liquidity grab in SMC. Duncan is here. It is Duncan. I caught you. I exposed you. Cool. So that's a cipher. It's that market, right? You'd be entering that. If you trade ciphers on the 4-hour Japanese yen to the euro, you'd be basically placing an order now. Or you'd set a limit order. So just for an example on this, guys, the great thing about these patterns is people set and forget. So you get up to your order level, 142.84, and you create a new order. And like earlier, we placed an at market order telling the broker we want to get in now. With this, you could put a sell limit order, okay? And you're basically telling the broker, actually, if we push up to 142.88, okay, so when we push up to 142.88, then I want to get in, okay? And it will wait for a while and it will put that order in. And then if price action pushes up to that level, the broker will fill you at the best possible price. The best possible bid price there at that level. So that's it. That would be a sell limit order. No Adler this morning. Do you mean alert? Maybe you mean alert. Oh, it's been a good one. You can catch the replay. This will be on YouTube. The only thing with the replays on YouTube, it takes, I think it's like 20, maybe 24 hours or something. They do like a screening process where make sure it's not violating any words and stuff. So they take it off of public view and then they put it back up 24 hours later once it's been screened. So unfortunately, if you do want to watch the replay on YouTube, you're going to have to wait till tomorrow morning probably. I think it's between 12 and 24 hours. So yeah, I might come back on and stream again tomorrow on all the platforms. I don't know. I haven't decided yet. Let me know if you think that'd be useful. But as this portfolio goes, we're kind of coming to the end now anyway. We've talked about a lot of good things, a lot of good opportunities. Tomorrow, what I'll do when I come on, I'll share with you some swing trades because, as I say, we're going to go into the summer. And there's going to be some opportunities to look at some swing trade setups. And there'll be obviously a lot more pairs that I can go through. So maybe we'll do that tomorrow. I'll give you guys an insight into what I'm looking at on a broader portfolio in terms of swing trading setups. Because there might be a bit more to talk about on that front. And if you guys have got any setups you want to share with us, let us know in the comments. Let us know if you get value from these live streams, because I don't always do them. And let me know if there's anything you would love to see us cover in this stream. And if you're in tier 1, I'll be back for definite tomorrow inside the platform. And until then, take care, have a great rest of your day, and I'll catch you tomorrow.